Hello, it's Lex MPI back with another video, and today I'm talking about the GameStop situation. You've all heard about it, you've all saw it in the news, it's been everywhere. I'm going to address it, and I'm going to talk about how that impacts cryptocurrency and how the decisions by hedge funds, RobinHood, and the institutions have made the case for decentralized finance. So if you're not aware, what happened was hedge funds on Wall Street took a short position on GameStop, a very large short position. So a short position is when you are betting that the price of an equity, in this case the GameStop share, is going to go down in value. And how you do that is you borrow a stock that's on the market, you sell it. So you borrow stock GameStop, you sell it, and for this example, GameStop costs $10. So you borrow GameStop at $10 and you sell it. So there you have $10 in your pocket. The price then goes down to, say, $5. At that point, you take your $10 that you made when selling the stock you borrowed, you buy it for $5, and you give it back to the original owner. So that stock you borrowed goes back. But the beauty of that is that you only bought it for $5. Therefore, you pocket the difference. So you made $5. Simple. However, the problem that came about with this GameStop situation is a forum on Reddit called Wallstreetbets. This is a group of, some say autistic, some say crazy, I call them enthusiasts, investors. Notice that 130% of the floating shares for GameStop were being shorted. So long story short, the hedge funds had shorted more of the stocks on the market than actually existed. And they said, if we push the price up of GameStop, they're going to have to close out their short positions and buy these stocks. So let me explain how that works. So in my prior example, the hedge fund borrowed some stocks at £10 or $10, sold them on the open market, cash, that means they have cash $10 in their pocket. The price went down, they then buy back their shares at $5, give it back to the original owner, and they pocket the difference. So they make $5. But what happened is Wallstreetbets said, we're going to push the stock price up and create a short squeeze. And what that means is the person that borrowed at 10 now sees the price go up to, say, 15. And when that happens, if they wanted to get out of their short position, they would have to buy that stock at 15, meaning they lose £5 because they borrowed the stock, sold it for 10, it's now worth 15. So when they need to give that stock back to the original owner, they need to buy it at the new price of 15. So that's how you lose on a short position. So the Reddit investors banded together and said, we're going to push up the price of this stock and we're going to buy it. So the stock price starts going up. And this hedge fund is looking at it going, we're getting absolutely hammered. We're losing money here. We borrowed the stock at 10, sold it on, and now it's worth 30. You can imagine the hedge fund sitting there going, what the hell is going on here? And this is beautiful. This is the people, a Reddit group, taking on a hedge fund and bankrupting them. They had to be bailed out. The price was going up so fast and so high on GameStop that they had to be bailed out for the tune of $2 billion. The people, Joe Blogs, Main Street, you and I, took on Wall Street and beat them. A hedge fund had to get bailed out. Are we hearing this? A hedge fund. Because a couple of guys on Reddit, and girls on Reddit, decided to take them on and go long on a stock when they were short. Now, the short squeeze aspect of it is the price is going up. So, and every time the price goes up, this hedge fund has made a paper loss because they borrowed the stock at 10, sold it, they have $10 in their pocket now, and the price is going up. So if they want to close that position, they need to buy at the new price. Think about it. This hedge fund has shorted 130% of the available stocks of that particular share. GameStop in this particular example. So if the price they borrowed and sold at was at 10, or they shorted, and the price is now, say, 100, they're like, crap, we need to get out of this position. But to get out of the position, you need to buy the stock and give it back to the original owner. The problem is that because they've shorted so many of the stocks, and the Reddit guys have bought and are holding these, they need to pay a premium to buy because there's very few shares on the market for sale because the Reddit guys have said, we're buying and we're holding, we're going to squeeze you out. So the hedge funds have to buy in at the increased price to close their position. The problem is, though, is that, as you probably know, if you have lots of people buying something, guess what? The price goes up. So the hedge funds that are going short, to get out of their positions, essentially are joining the Reddit guys. So essentially screwing themselves over. It's a vicious circle. To close your short position, you need to buy the stock. When you buy the stock, you raise the price. The Reddit guys were so smart, they clocked this. And they said, if we push the price up, it will perpetually go up. Beautiful. So what do you think happens next? The Reddit users have hedge funds, Wall Street on the ropes. On the ropes, losing billions. The price is going up, it's going crazy. Elon Musk gets involved, showing support to the Wallstreetbets Reddit guys. The day after Elon Musk puts his tweet out, the stock price triples. These hedge funds are bleeding. It's over for them. Finished. You'd think, right? You would think. So the next day, RobinHood, Trading 212, Webull, and many other trading platforms stop allowing retail traders, so you and I and the Wallstreetbets guys, stop them buying these shares. They halt trading on those specific, on GameStop in particular, and other stocks that the Wallstreetbets group people were targeting with buying action. So the hedge funds are losing money because they made an irresponsible bet. And what the system does is it says to everyone, hedge funds can't lose. That's not how it works. When you're in the 1%, you can change the rules of the game. We can shut down the market. You can no longer buy this stock. And the sneaky thing is they all turned off buying, but didn't turn off selling. You see how that works? You can't buy, but you can sell. Driving the price down. They changed the rules mid-game because they were losing. It's the most blatant scam, manipulation I've seen. It's so blatant, so obvious, so in your face. It is insulting. The hedge fund should have gone bust. Their job is to hedge. They got beaten by guys on Reddit. Take the loss. No, what they did is they got all the exchanges to say, stop allowing people to buy this stock. What happened to the free market? Yeah, these are capitalists. Hedge funds are capitalists. They're the ones who speak, low regulation, don't let the government get involved, free trade. Free market economics until they're losing, until they're not making money. Same thing happened in the financial crisis. Free market, low government, no government, without regulation. Oh, bailout money from taxpayers. Oh yeah, we'll have that. Yeah. They change the rules when it suits them. We saw capitalism until capitalism goes against them. And that is why decentralized finance is the future. So decentralized finance is, have a look at all the coins. You're looking at Compound, you're looking at Uniswap, you're looking at, what other coins are there in the DeFi space? You have Chainlink, you have Carver. All these protocols are all DeFi protocols. SushiSwap. Decentralized finance allows people to borrow money, to exchange cryptocurrencies and coins without a central authority. It's all regulated by the blockchain, by smart contracts, mainly on the Ethereum network. Let me give you an example. If you have loads of cryptocurrency and you wanted to borrow some USDT, what you would do is you deposit some Bitcoin as collateral, and they would give you some USDT. Simple as that. Don't need to give you a passport. Don't need to give your name, address, phone number, eye color, hair color, bank statements, credit checks. You put down some collateral and you can borrow what you want. You can't be discriminated against. They can't choose not to let you borrow it because it's peer-to-peer. A bit like how torrents work. Because someone else in this DeFi world has deposited money on the exchange, in this DeFi bank of sorts. And you're going to borrow that. And it's all written in a smart contract. So when you pay back your USDT, you get your Bitcoin back. It's all decentralized. You can't, none of the 1% can make a phone call and be like, stop someone buying that, or don't lend that money to somebody. It can't happen. It's decentralized. And what we've seen here is the fault and the lack of integrity, the manipulation that can be done in a centralized system. On a trading platform that is literally meant to just make the order you send to them, tells you that you can't buy a stock because it's going up too much. They said today you can't make money. Decentralized finance is the future. And what RobinHood have done, what these hedge funds have done, have proved to everyone that blockchain and DeFi is where we need to go. We need censorship-free finance for people. So we have decentralized lending platforms where you can borrow money in a decentralized fashion. We have decentralized exchanges like Uniswap and SushiSwap where you can swap cryptocurrencies peer-to-peer via a smart contract. What we now need is for some genius in Silicon Valley or elsewhere to come up with decentralized stock markets where they match buyers and sellers on smart contracts, and you can't have the CEO of RobinHood or Citadel or any of the hedge funds telling you when you can and can't buy a stock, because you buying that stock makes them lose money. Blockchain, DeFi, smart contracts are the great equalizers. Because what happened on Wall Street over the past couple of days is absolutely disgusting. And what happened in 2008 when the banks were potentially running Ponzi schemes, selling bad debt, in CDOs. And the answer to that was Bitcoin. Bitcoin came out of that. When people lost faith in the financial system, Bitcoin was born. And I think today we saw people lose trust and lose faith in the equities market. And hopefully some smart person is able to apply the principles we have in DeFi for lending and exchanges and apply that to the stock market. So no one can ever block you from buying a share. Anyway, I know I had a bit of a rant today about that, but I saw it happening and I was absolutely disgusted as to what the 1% were doing there. The hedge funds were losing and they changed the rules of the game. So I hope you will take the opportunity to have a look at the DeFi space, the DeFi projects that have been doing, the DeFi coins have been doing really well recently. I sold a lot of my Litecoin and Ethereum and got into the DeFi space a couple of weeks ago. And I've done swimmingly out of it actually. So I implore all of you to take a look at the DeFi space and have a think and have a look about how you can support some of these projects. And hopefully we'll see decentralized finance take over the stock market at some point and get rid of Robinhood and all these exchanges and move to a decentralized way of buying shares. Thanks for listening to my rant. Please like and subscribe. Have a nice day. It's Lex MPI.